Hey everyone, welcome back to Corporate Decoder. Today we're digging into a report from Loomis Sayles, a big investment firm. Now usually these reports are drier than a popcorn fart, but stick with me because this one has some hidden clues about where your money might be headed. It's like following a trail of breadcrumbs, except the breadcrumbs are confusing financial jargon. Before we jump in, if you're into getting the real story behind corporate speak, be sure to subscribe. And hey, we've got a Discord community, link is in the description, where you can chat with other investors about reports like this. Okay, let's get to the point. Loomis Sayles runs a bunch of different investment funds, kind of like different flavors of ice cream. This semi-annual report covers their Loomis Sayles Funds I, which includes a peek at how these funds performed in the first half of 2025. We'll be looking at a few of them: the Fixed Income Fund, the Global Bond Fund, the Inflation Protected Securities Fund, and the Institutional High Income Opportunities Fund. We're going to try and figure out what the key takeaways are and what they mean for you. First off, this is a semi-annual shareholder report, basically a check-in to let investors know what's been going on. These reports are for the 6-month period between October and March. One of the first things this report looks at is costs. What did it cost to run these funds? They give you a hypothetical example. If you had $10,000 invested, how much would you pay in costs? For the institutional class of the fixed income fund, it would be $31 or 0.61%. So if you had 10 grand in that fund, that's how much you'd be paying to keep the lights on for 6 months. Next up, they give us some key fund statistics. The fixed income fund has total net assets of around $433 million. They have 717 portfolio holdings, so a lot of different investments, and their portfolio turnover rate is 37%. Portfolio turnover basically means how often the managers are buying and selling stuff. A higher number means they're trading more actively. In terms of advisory fees, they paid out approximately $1.1 million to advisors. Then they break down what the fund is actually investing in. For this fund, 41.7% is listed as other investments less than 3% of net assets. Then they invest in short-term investments, aerospace and defense, independent energy, sovereigns, some ABS line items, and so on. It's like a peek into the fund's shopping cart. If you want, you can see more of the specific subsectors on your own by looking at the document. But these are the key takeaways that most people care about. They also provide the credit quality. There's a huge chunk of the money in BBB rated securities. This report also has a footnote about credit quality that explains that credit ratings come from S&P Global Ratings and help measure the likelihood of an issuer defaulting. They also talk about material fund changes and changes with the accountants, but it says that nothing significant happened that way this past period, so we will just skip it. Hampton, they basically follow this exact same formula for the other funds. For the Global Bond Fund institutional class with total net assets around $330 million, the same statistics are given. Let's see what's different. Their portfolio turnover rate is 27% lower than the previous fund. Their biggest holdings are treasuries and mortgage related, along with other investments. This fund also breaks down its investments by country, with the US being the highest, followed by Japan and China. They also provide credit quality information. They repeat the information as well for the Class N fund. It has all of the same stats as the previous reports, but Class N has different expense ratios from the institutional class. Okay, next up is the Loomis Sayles High Income Opportunities Fund. That one has key fund statistics in the report, and it breaks down what the fund invests in, industry summary, and credit quality for different securities, along with the explanation about what this means. Now comes the Loomis Sayles Inflation Protected Securities Fund. This one is heavily invested in treasuries, credit quality, etc. It also has material fund changes and industry summaries. But let's get to the important part. So what do we make of all of this? Here's the deal, in my opinion. Loomis Sayles is managing a lot of money. These funds are big and they're actively trading, buying and selling all sorts of securities. It's like they're constantly rebalancing a giant complex financial puzzle. The diversity in investment strategies is notable. They're not just sticking to plain vanilla bonds or US companies. They are investing in different countries, currencies and asset types. It's like they're trying to spread their bets across the whole world. The expense ratios in each fund are pretty consistent. It's also good that there weren't any material changes in their operations or with accountants during this period. Alright, that's our quick tour through this Loomis Sayles report. If you found that helpful, be sure to hit like and subscribe to see more of these sorts of deep dives. Also, be sure to join the Discord channel in the video description. Stay critical out there, and remember to always do your own research before making any investment decisions. I'll see you next time.